Hey everyone, Sherman here. We're back again. So today I want to talk a little bit about backtesting. Uh, through backtesting, we'll be able to understand where our strategy goes wrong. So over here, I've marked out the recent highs. All right, the recent highs is 1.10266. Pardon my eyesight. I am getting on in my years. Okay, so anyway, 1.10266. And we also have another level over here, 1.10911, 1.10937, okay? So what I want is for price to not break this level, this black line that I have. Because if price does not go up, then price should turn down. All right. And the reason why this is important because euro dollar for the past weeks has been in a whipsaw. See, from here, it came down, it went up, came down, it went up, it came down, and now it's gone up again. So I'm interested in trading in a whipsaw environment if I can try to figure out where it cannot go. So where price should not go is, it should not go past 1.10, sorry, let's see, 1.109, 1.10808. Okay, that's where the black bar is right now. Right, so we're going to let price play out, and then I'm going to try to place a couple of trades and see if the thought process works. So price is currently playing out right now. Let me just try to increase the speed. So this is the 4-hour time frame, as you can see. Hold on. Let me just slow it down just a little bit. You can see over here, let me just highlight a couple of things. We are on the 4-hour time frame. And what I want to show you is the thought process, all right, behind the trade. So now that price has pierced above this level, I will be curious to see if I can actually take this buy to the upside. Okay. However, the bigger direction, is it this way or is it this way down? Because if price makes its way back down, then well, this price could potentially come back to the downside. And just because it pierced the top, you see, when price was over here and it pierced, it did not mean that it could actually get up there. In fact, sometimes price pierces and then it turns back down. So that's something in the back of my mind. And just because price clears a certain level that I've drawn does not mean that it's a breakout trade. Yeah. So in this case, what I'm interested in is a failure to break out further. All right. If price were to continue, then it would have to break out, make a smaller pullback. You know, a pullback, a breakout, another pullback, and this is the one that I would try. Right? Because now there's a smaller consolidation to support the move to this level. Right. So let's see what we get. So either we get a correction, it goes up, or it just completely comes back into the range. You see? Okay. So either one will happen. So let's just continue and we'll see what happens. So over here, you see price collapse. And then that's when I'll be saying, whoo, luckily I did not take the buy, right? It went up and then it collapsed. Luckily, I didn't take the buy. But just because it came back in, does not mean I'll take the buy as well, because even though I think it should go to the downside, but trading a leg is potentially tricky, right? Because these legs can also pull back. So what I'm going to look at is I'm going to go look at this area, and then I'm going to see if price is able to, at some point, break this and then come down here. And then here, and then here. So there's going to be one level here, there's another level here, and the last level is over here, right? But first, it needs to clear this low. Then if it pulls back, we'll try to trade it down here. There's one potential trade. Now, of course, you try to trade it down to this low, then this low. And let's see. how it plays out. Okay, so let's continue. At this point, we've not done anything. So price comes back to this level and it starts to consolidate. So still, it's a consolidation. Now it makes me wonder if this is a shoulder. This is another shoulder, and if it will break out and pull back, then it comes down again. That is something that's in the back of my mind. Okay, so let's see if that plays out. It looks like a correction. It looks like it's gonna break, and it broke. So seeing this correction breakout makes me want to makes me think that this is a sell bias. Okay, so let's see if it continues down to at least this low. So today we are talking about the bias. So when it comes to swing trading, we have to have a sense of the market and get the bias correctly. Otherwise, it's going to be very hard to stay in the trade. Yes. So over here, you can see how price came here, consolidated, came down further, pulled back to this level before it came down. So this will be a good risk reward right there. Could even put a sell limit right here, actually. You're playing the statistic that price should not go up, but price should come down. So that is one way to actually look at it. All right. So let's continue. Now, once you have reached this area, your thinking is price will continue. So close about 70% and see whether the rest can run to this area. All right. The reason for this is because the reason why you want to take some off is because there is a potential for price action to do something like this, and then it makes a 1, 2, 3 pullback. This will make a good sell for one more down. This, all right. So this would be a strong first wave. This would be a third wave. This is the correction in the middle. But that is in the top back of my mind. But we're gonna see what happens. Okay. So if you took this piece down, that's good. And this piece required a certain amount of time before we could even take this trade. Right. So that's how that's one trade. So now we're gonna wait and see what happens. Either you took off everything here at the low, or you took off 70%, 80%, and see whether this continues to just run. Okay. So we're just gonna continue. So price is continuing and it looks good. However, it's important to note one thing. Note that you see how price goes up, comes down. At some point, it stops going down. See, this is the same. It went up, it made a correction, it broke, but it did not continue. At some point, one of these corrections will have a motive wave that fails to continue and pulls back. You see, so in this case, it failed to continue and it pulled back. Does it make sense? So take note of this, all right? So at this point, when I see price action breaking, I start to wonder, can I actually take a trade to the upside here? This is in the back of my mind, right? Because after a motive wave, a correction is expected, right? And it's A, B, C, impulse, a bigger correction, and then you're gonna get one more wave down. Remember, that is something that it's important, right? It's important. So if I do not want to trade this wave up, that is fine. Then we just have to wait for the entire correction to play out. So either you trade this one up, or you just wait for the entire piece to play out before we trade this one. So this is the one that we are looking for. That you don't want to trade this, I think that's fine, because corrections are very messy. All right, so let's just continue. At this point, I do not see any trade as yet, so I'm gonna leave it. I'm gonna leave the trade. So I'm not going to do anything, but instead I'm going to put something like this, and I'm going to move it to the side. And what this means is if price makes its way out here, I'm going to sell it here, down. All right. If I lose, well, I'll lose above this top, right? If it's going to be a sell limit order. But well, let's see if price gets there first. So right now I'm not doing anything. I just want to wait for the correction to end. And I think that the correction will take this amount of time. Right? From the 12th of February all the way to March and April. So I'm just waiting to put big lots. All right. I'm just waiting in order to put in put my standard lot trades in. And I'm hoping that this one will actually push up, clear this top before I can sell. And let's see if that happens. I'm thinking, okay, you can go up now. You can go up now. Great. If it breaks this top, I'm going to sell it. All right. So let me mark that out here. If it breaks this top, I'm going to be a seller here. Seller. Stop. My trade. I will say, oh dear, I've waited about a month, and then instead of coming back up here, I can sell, you decide to break so early. Okay, so this is not what I want. I'll be a bit disappointed, but we cannot chase this trade because if you look at price, it's now at this area over here. See this area over here? It's now at this zone over here where price has potentially moved up before, where price has acted as support, push price up, resistance, push price down. So it is at this region. Sorry about this weird drawings, but you know, it's over here that you cannot take a sell. Even though it looks like a powerful sell, is from a swing perspective, we're not looking to sell here. We're looking to see if we can actually take a buy. All right. And why is that so? Well, you're looking to take a buy because of this major major support and resistance level. The second one is in this move down, it is missing the right correction. Either it did this, otherwise it would do this. Why? Because that's how the market pulls liquidity. Okay, that's how the market makers pull it. They have to create a liquidity in the market. So that's how price moves. If you did not do it there, it will do it here. All right. So this is what they call a flat. This is called an expanding flat, where it breaks the low a little bit before it goes back up, making an expanding flat this way. Okay. So now that that's in the back of our mind, now we can begin to trade up from this known area. Okay, from this known level. But you're not going to take a buy from here because what if it just crashes right through? So that's not what we want. Therefore, so how do we actually decide that we should take a buy? Well, let's have a look. Now, at this point, I'm sure you're going to see some engulfing candles on the daily, but we're on the 4-hour. So this is where we're going to focus our trading attention on. All right. So we're not doing anything. We're not doing anything. We're just leaving it alone. Now, can you start to see legs? See these legs? It's pushing to the upside now. Right. Let's continue. Ooh, you see, this is a consolidation here. Can you see the consolidation? So I just want to highlight it. This is very important. You see this consolidation right here? How price moves away and pulls back. This is where you can buy. So every time it consolidates, it moves away and pulls back, you can buy. If it goes up, it pulls back, you can buy. Why? Because we believe that this and this are going to play out based on the bias that we have in our mind. But we're not going to just place random trades because we have that bias in our mind. We're actually waiting for proof that price is moving in that direction. And how do we prove that it's moving? A strong move, a consolidation that breaks out, then comes back to this consolidation, breaks out, comes back to this consolidation, breaks out. All right. So let's see what happens. So you're looking always for pullbacks to to areas of consolidation, right? Then you're expecting this next move. That is exactly how it moved as well. See, it moves back to the left shoulder. These are bullish structures. Now, at this point in time, so at this point in time, this point in time is when the credit structure in our mind should be roughly complete. Now, it's also possible for price action to get up above this level. All right, you see this? This level. You can also get above this level. So this is where we're supposed to take profit because it's at these highs, you see. This is an important region where you don't want to be a buyer here. You're actually looking for a reason to sell it. All right. So when you're selling this, just bear in mind that first wait for this trend line to clear, and then you're looking for a pullback to sell. So that is in the back of the mind. So a couple of trades that you could have caught was this one down, which required a time factor. All right. This one up, this move up. So there's two trades I could have seen. I could have taken with this swing trade here and this swing trade up. And the reason why these two would be good trades for me is because I can measure what the stop loss should be. All right. So in this case, if I had sold this, well, it's easy. The stop loss would be above, would be there. If I had bought this, the stop loss would be below because you expect the consolidation to prevent price from going down. You expect this consolidation to prevent price from piercing up. You see? That makes sense? So when price came back up here, see how price went up here? But you expect price not to be able to go up because of this consolidation. They're supposed to push price down. So in this case, this consolidation is supposed to push price up. This consolidation is supposed to push price down. This consolidation is supposed to push price up. Okay. So and so this was a trade that we were taking in May, right? And now that this correction is done, and now we have this. So the trade that we're expecting is some move to the downside. All right. So how you trade this to the downside? Well, you're looking for something like an impulse, a correction, and impulse. And here's the very interesting thing which I will highlight. All right. So you're looking for a first wave down. You're looking for a correction, looking for a first wave down, looking for a correction. So here I'm looking for a first wave. I'm looking for something that says, that shows a change of trend. Right? So this made a sideways and made one up. That's fine. It means it could potentially do this. Price can't continue and then it breaks down, which means at this point in time, I'm looking for a move up that allows me to sell it down. Okay. Now, this is the very part it gets very interesting. For some, they might after this sell, they're expecting to come break the low. However, I will tell you now that there is a problem with this move to the downside. Even though it went down and you take profit off at the bottom, which is the standard way of taking profit, you can also take profit off using a 270. So let me just adjust this like this. All right. We can flip this impulse, correction, impulse. You take off profit here. However, there is a rank of correction that has not occurred, which is, you see, this rank of correction. Hold on. This rank of correction here has not happened on this side of the trade. This side that was going up has got a pullback, you see, of this nature. In this move down, it has a pullback of this nature. This move down is lacking a pullback, which means that at some point around this lows, it will pull back. Why? That is nature. That means it's totally dynamic. I'm seeing what happens and I just interpret the patterns. And if this one has got a pullback of this rank and this has a pullback of, you see this rank over here, rank of correction. This one needs a rank of correction that is similar to its friends. So this one has got a pullback that looks like this. This has a pullback that looks like this, right? This has a pullback that has a proper rank of correction. This one has a rank of correction. This needs a rank of correction. And that was why you are looking for a move up, right? To fulfill the rank of correction over here. And that is why the buyers at this point, you need to start looking for the buy. And in order to take this buy, you have to go to a very low time frame, a 1 hour time frame, because we are now on a 4 hours. So this moves up, you're basically trading a corrective structure, which can be potentially tricky. So sometimes you just have to believe that the price will bounce and just take it off a fib level. In this case, price went to the 0.786 level before it bounced, as you can see. And then you're looking for price to come back up to this level over here. All right. From 786, you want price to come back up to this level over here, which is where price flipped. Okay. So a fib level, important fib level is 786. Oh, and that's it. And price made its way back up to this level right now. So a couple of trades that would have made sense to me would have been a trade from here because of this consolidation down. This move up because of this structure. 1, 2, 3. So this move is the second trade. This would be the first trade, second trade. The third trade would be this one because I recognize them. As I recognize the swings, the lack of certain moves in the market, which gives me a bias. And then I use the lower time frames, which are the 4 hour, to try to set up the risk reward. All right. All right. So this is how I see the market. I hope it helps somebody. And if anybody got questions, you want some charts to look at, ways to backtest your trading ideas, just leave a comment. If I'm free, I will try to address those questions as best as I can. Okay, then that's it. Thanks for watching. I hope it helps somebody. Bye-bye.